Good morning, everyone. Let's start with our daily market commentary. Now, first of all, let us start with the global index, that is S&P 500. The most important part of S&P 500, which is the weekly chart, seems to be very, very solid. And basically, the last up move which had taken place was roughly from the zone of 2400 or so. And once it came back, mostly 50-60% of the retracement, made a double bottom, and then again one more rally started. So we can say there were two swing levels. Basically, the first level was around this 2400 levels. The second one, where the upswing or the big rally started, was also in the range of 2600 or so. The most important part was this one had a lot of steam in it. Momentum was very strong, and this one had less steam, or you can say loss of momentum was happening at the top. Coming back to the first level, which was around this 2600, did make a bounce back, but then retraced it back and all the way went down to 2400 and so. Try to understand why this fall was so brutal and so fast was because there was no downside support on S&P 500 below this 2600 levels. So as we had indicated prior, 2600 would be make or break situation, and then it reaches almost towards 2400. And the most important part is to understand from a broader scale, the up move took place, went to the second high, and then again came down, and not even broke the important level, but also went down to the lower level. And from there, you can see a sudden recovery or a sweet recovery happening from this 2400 mark. Now, no one expected after such a big ferocious fall, there would be some kind of huge rally happening, not only testing 2600, again conquering that level and reaching out to the most important resistance, 2800 or so. So now for us, S&P 500 becomes a marquee markets, because now on the upper side is very, very strong. So 2800 is for us a huge resistance. This is the weekly chart, which has just started. End of the week, we can see almost towards 2800 or so. Now, going across 2800 and making new highs would basically take some time, but it is very, very clear that now it might respite around these levels, and then it might break out free about 2800. The most important point is to understand why this rally came, right? So the most important is, after such a big fall, can you get this kind of rally? Normally, after a big fall, you can get 50% of retracement, but that did not happen, but straight away towards 2800. Now, the biggest you can say the stimuli was the dollar index and the Fed meeting, right? So Fed meeting basically gave a pause to the rise of interest rates, and that basically shows the dollar will not become strong. So when the interest rates are rising, dollar becomes strong if US Fed increases the interest rates. Now they are saying that we won't increase the interest rates, and we have now seen in the increase of interest rate scenario, the dollar index has always zoomed up. It has always faced resistance to the top around this 97 odd mark level, came back, and now it is again facing the same resistance. Now, it is very clear that dollar index will not go anywhere on the higher side, because there will be a pause from the Fed for rise of interest rates. So one thing is very clear, dollar will now make a sideways rally, and if the sideways continues, you can see a good holding on S&P 500. So that's where a huge rally started in S&P 500 and did not stop. The most important point on dollar index is, if dollar does not become strong, it's good for us, correct? So if dollar doesn't become strong, so we do not go towards 71, 73, 74 kind of levels, higher levels would basically come to a standstill. So that's a good point for us from the macro point of view. Taking the other chart, which is most important again for our economy point of view, is crude, right? So let's say Brent crude, and if you see the weekly chart of Brent, this was the highs which were making, and also created some kind of turmoil for our markets. But then you saw a sweet downside, and you can say a brutal downside happening all the way. The most important again to see the last rally, this was the base form. The last rally, this was the base form. So these were like two key marquee levels which we had. It broke this level in no time. Apart from that, it broke the most important crucial level, which was around the 63 mark or so, went down, tested it, zoomed all the way down. Now it again went up. That was the most important point, and it maintained sideways, right? So that is a very good structure to understand. After a sweet fall, it comes back with a recovery. but then it takes a lot of time spending around this 62, 63 level. And once it crosses that week, not only this resistance has been crossed, even the prior resistance, more importantly, this was the support which became the resistance. So all the way, so many resistances have been breached. Now, the most important point to understand from the oil point of view, the fall was so brutal, it made a pause, came back, took a lot of support around this zone, and it went up with a sweet spot towards 67 or so. The most important to understand is this would become your stop loss target. So it cannot go below 61 level. So crude is no more showing any kind of downside, right? And the second point to understand, it might retrace back towards 63.8 or so, or 50% of this candle, and it will resume high towards this 70 odd mark level. So 70, 72, 75 is now the new range for oil to click into. Now try to understand two big macro events. Oil is going to go on the higher side, which is number one. And second, dollar is not going to be expensive, right? So dollar USDINR is not going to zoom up, but oil will zoom up. And that is why after this huge rally of last week, you can now see Asian Paint, Pidilite, Indigo, all these people going down, sliding in the yesterday's trade. So the most important is to understand further fall will happen in these kind of counters. They are already at the highs and the fall will be brutal. And it is very clear it might get some respite coming back, but 71 odd target for oil is very, very clear. So 5% to 7% upside on oil, which will come very fast. Why will it come very fast? Because the fall was very fast. The rise will also be very fast. Taking out on the dollar index point of view, so USDINR, one thing is clear, dollar is not going to become more expensive. So dollar is not going to be strong. That's what we need to understand. The most important part was the rise which happened at the last highs which were made, came back, and then it basically gave a base violation kind of structure. Fall was again sweet on the downside, tested the same 72.4 kind of levels, came back, again zoomed all the way, and then again trying to reach up. The most important part is to understand this upswing which is happening now compared to the prior upswing. The upswing was very fast and tested it, and then it went out again. This time it's going sideways, right? So the steam is not there. It might make a spike upside or so. For us, the most important or crucial level is the top of this Mori Wazoo, which is somewhere around 72 odd mark, right? So that's where even the dollar is going to reside around this range, or maybe make a spike almost towards the prior spike, which was also the base of the Mori Wazoo, somewhere around 72.5. So the dollar range is going to be between 72 and 72.5. And you need to understand, if the dollar doesn't become stronger, the IT will now no longer make new highs. So IT sector, the new high is done. New highs will not be made in the IT stocks, because now dollar will not be thumping higher. So the most important is USDINR might also go sideways, and only point is crude might have a negative effect. So the most important on the dollar terms, if you want to trade, look at the weekly chart, look at the important level of 72 and 72.5 kind of scenarios, and on weekly formats or inside the day, you can basically go out and see for sell opportunities. So these are huge resistance level for USDINR, also bringing not only from USDINR but also from the dollar index point of view. So that's going to remain sideways, and this might give an opportunity for sell. So that's where the macros are. Dollar is not going to become strong. Crude will go higher, so the crude related stocks will face a downside. So that's what we need to remember now. Coming down to our index, so let's take now Nifty and Bank Nifty. The most important point on Nifty first is to see the weekly chart. Now the weekly chart basically shows a good kind of head and shoulder getting formed, inverse head and shoulder and stuff like that. The most important is to understand this fall was very fast, right? Like Snp500. And the most important was there was loss of momentum at the top. So there was very clear that this loss of momentum was there. So the fall would come, but nobody expected the downside because of this ILFS issue came in, right? So now the point was brutal fall came in and a bounce of 50% was basically seen. The most important point after this is to understand after the rally, right? It has never tested all the way back towards 10,000. So that's a good sign. It's trying to hold up, right, on the higher side. So more or less, if I try to see 10,530 kind of level is very, very important or crucial. to understand on the lower side, right? So these are the pointers which he has tested most of the time around this 500 levels. Again, it came back towards this 530 point, but not now around 580 and so on. So the spikes have been made on the downside. The good part is the spikes being downside means it is being bought all the time, right? So that is one thing which you need to understand. And on the top is also a complete congestion. So there has been a false breakout on this side, and then you saw a good downside rally coming into place. Now the most important is to understand after this false breakout, if a new breakout is trying to emerge, that will only happen if it crosses the top of this Moribazu. So if we see the high of this Moribazu, which is around 10,930. So the only upside in Nifty is possible after 10,930. So this is like a view of next 3 to 5 months. At least this 930, even on the election point of view, it doesn't go or breach, there is no upside which will come through. So this is like on the weekly chart, and obviously these are little spikes which will form a hindrance, but the most important is to understand the upside, the fall was very fast, the rise will also be very fast. So obviously this big upside will only come if the election turns out to be in the favor of BJP, and then it can give a big boost from 930 to 11,800 or so. The most important is to understand this rally will not take much time, right? So this will happen in a week's time or so. A zoom of roughly around 1,000 points will not take time. The second point is to understand the upside is now being limited towards 930 or so. Seeing on the downside, now let's go out and understand on the downside. It's been forming a kind of one-sided triangle, trying to congestion on the higher side. But the most important is to understand if the downslide starts, right? So let's say if the election is going to come near, there's going to be uncertainty which will pan out. The most important is yesterday's week's low and this week's low is almost same. So 630 has been the marquee level for last 2-3 sessions and 2-3 weeks. And the most important is if this 630 kinds of breaks, not now, maybe after a couple of weeks or so, maybe in the next expiry or so, 630 will bring him straight towards 530 and 530 will bring him straight towards 10,000. Now, one thing one has to understand, there is a clear runway of 500 points on the downside, right? So that is the most important part to understand. It is kind of forming that U-shaped pattern, might keep going sideways along the way. And once this 530, 630 and 530 levels are taken out, you will see a huge downslide happening towards 10,000 or so. So that 500 points downside will come very fast, right? Obviously, this will come because of uncertainty, and that might emerge towards March or April format when we are trying to cling towards the election. And that's where the rally of downside or upside will basically come into picture. Now, that was the weekly view till the election point of view. For me, the most important is 630 on the shorter time frame. When I want to trade on Nifty. The second part is 530 kind of range, and once these levels are taken out, I'll be bearish almost towards 10,000, right? So there is no way stopping towards 10,000, and that will be a free fall that will happen. So that's a good risk reward trade one can get, but one has to basically get into the groove very early around the 630 kind of mark or 600 kind of mark, and then keep eyeing for 10,000. That's where a huge downside or huge risk reward will come into place. Now, the most important is to understand from the daily side. So let's see if we can get a better picture on the daily side. When I see on the daily side, this was very clear. It basically made a top and then sprinkled down. The most important part was it sucked in a lot of people on the upside because it opened gap up above all the resistance range, went up, and then just started a downward journey. The most important part now is to understand this rise was faster. Obviously, the fall will also come, and that's where the fall has come, and it has reached almost to the lowest level. Now, that's what I was trying to say. On the daily perspective, the day low was around 624. This day low was around 627. This day low was around 630 or so, right? So the most important part is trying to be in that congestion mode, trying to start with a green candle. Obviously, it will go almost towards 740 or so, and then it has to basically conquer 780 for the higher level. So again, on the shorter time frame, 780 is the important level to understand if it has to go on the upside. So that's what we need to know that on the upside, the most important level is now 780 or so, and then small towards 740. So 740, 780 is kind of range where it will go up and might go up towards this 900 kind of levels. So again, the conservation mode will continue, but the most important is to understand many times it has given downside wick but has gone up, again has tested around this region of 630, 1, 2, 3 times again tested this region of 630. Now why I'm not bearish on Nifty here, because it's been falling for such a long time, right? And if you want to break the most important level and the downside and to come almost towards 10,000 or so, it might give you a small bounce, might come back down, and that fall might basically take everyone aside. So this sharp fall might come because of the unknown reason, but there is no point in understanding that there will be a huge downside that can happen. The second part, which also was not seen from weekly side, but is very, very clear on the daily side. So first level is around this 630 or 600, you can say, because this was even a gap zone, small gap zone around the 600 level. So let's say 600, 630 is very, very important. The second level, which I can see a small support that can come through, is 10,340 or 330 kind of levels. So one thing is clear, 200 to 300 points fall straight on this level, and then after this you have straight fall towards 10,000. So one thing is very clear, that's what we were seeing on the weekly side, 500 points fall. Then we are seeing on the daily side, inside view that we have got around this 580 to 620 kind of levels taken out. You will see straight towards 10,350 or 330 kind of zone. Once this will never take a lot of time to break, and this will reach almost towards 10,000 in a flip. So that's what one has to understand. One has to be bearish on Nifty if these levels are taken out. So there is no point in being bullish. But right now, after seeing loss of momentum, such a big fall, coming back to the same point, it might take a bounce back. Now, when you see from the top, 11,100 kind of range towards 10,600 kind of range, so more or less 400, 500 points downside has taken place. So we can say 50% of upside, which will also come around this range of 870 kind of stuff. So 800 to 850 kind of range can be the upside. But the upside getting capped, going sideways, and being now in the lower zone, right? It basically will give an open doorway towards these two levels, right? So that is a huge risk reward that one would get prior to election levels, right? So whereas the election comes near, we can see some uncertainty, and these levels should be kept in mind to go in for bear spreads. So that's what Nifty is there. Let's even see from the 4-hour side if we can get some more clue out of it. And 4-hour also gives us the same viewpoint. These were the support lines, right? And then you have straight away downside support towards 340. The most important was, if you see now, the lower side is around this 590 kind of zone. It has not even reached to this level. So one good thing is that it has not gone to the reset point. After a huge downslide, you are seeing some buying coming in, again downside, but these were fragmented downside, and again buying emerging in. But one thing is clear, for a bigger upside, almost let's say towards 940, 950 kind of zone, only after 788, right? So obviously these levels have to be taken out to reach to these levels, which will be fast. But the most important is it might take a lot of time to overcome this 800 kind of mark and go towards 900 kind of mark. So can I say on the upside, 800, 900 becomes a very good zone to make a bull spread. So if you're planning to make a bull spread, so 10,800, 10,900 becomes a very favorable zone for bull spread. And then obviously to recover your debt, you can also go short on 11,000. So if I make a bear bull ratio, that might become way more interesting on this end, because if I'm making bull ratio, so if I'm trying to buy, let's say 10,800 call, I will sell 10,900 call, and then you have selling of 11,000 call as well. So we are trying to sell 2 over here in order to recover our cost, and then the cost basically goes down if you're trying to make bull ratio. Now the bull ratio would basically cost roughly around 15 bucks, 12 to 15 bucks. If this bull ratio, which is into 750, 75, which is a lot size, and would basically cost you 1,000 rupees to play this game. So 1,000 rupees of loss is what we are trying to see on this bull ratio. But if it turns in our favor, so let's say if it goes around this 800 mark and towards the expiry, even if it inches towards this 900 or so, so this 800 to 900 bull spread will give me a roughly around 70-80 rupees. So if I'm putting around 15 rupees or so and getting output, so let's say from 15 rupees, if I get an output of 75 or so, would basically mean a very good risk reward of 1:5. One thing is that. Second thing is, when I do this bull spread, where is the exit point, right? So the exit point is very, very important to understand rather than placing the spread. So upside is noticed and understood, and why I gave you my reasons: loss of momentum, not coming back to the same base, the huge selling took place, the second selling was not that high, and now it is trying to reverse. So all that is trying to basically go in this bull ratio. Why ratio? Because we are trying to basically reduce our cost to the minimum level. The last point to understand is the exit point. As we have explained, for me, 10,580 is the exit point. So if, let's say, Nifty goes down, crosses this level in this week or so, the most important is all these sell values of 11,000 and 10,900 will come towards zero, right? And what I try to do is reverse only the buy position. So reverse only the buy position and keep the sell position. So you become an option seller. So you need to understand the risk by doing that. Our agenda is to understand maybe till 28th of Feb, it will not inch or reach towards 900 or 11,000. Once it breaches 10,580. So the best point is, even if you recover by reversing this position, okay, first you buy and then you sell. And even if you sell it at 20 bucks, you will basically recover your entire 1,000 rupees, right? Or you'll get some money at the end of the day. So the point here is to understand, I play the game without losing any money, right? And if you keep playing this with a risk reward of 1:5, there is no point in losing in options, right? So you need to be very, very sharp in understanding the important levels, placing your spreads, and then to understand the exit part as well. So the most important in options is to execute the exit part and recover your loss. So even if you recover 500 out of this, is amazing, because then you're trying to play not on 15, on 7. If you recover 50% of this, and your risk reward basically goes from 1:5 to 1:10. So these kind of things are very, very important if you're trying to plan to basically do something in options. So that's what the bull ratio seems to be look like. Let's now go for Bank Nifty. Going down to Bank Nifty, again, we need to understand whether Bank Nifty is strong or weak. The most important is, if Bank Nifty is weak, it will basically give a good downside towards Nifty also. So that is what we need to understand from Bank Nifty point of view. The one point was very, very clear, the same from the high. It basically zoomed down very fast, made kind of double bottom, almost this 24,444, and then it zoomed all the way up. The most important was, this is what we were trying to say, loss of momentum, which is right now seen in USDINR, right? Trying to go up, and these small bodies are basically forming at the resistance level. Always, if you see, for weeks, this level 25,700 or 27,500 is not been breached. So that's what is the most crucial level for us for Bank Nifty. And only this breaks, then you have an upside, or you can say new highs will be formed. And it's very clear when will this break. It will break towards the election mode. So that's where the upside gets intact for Bank Nifty. Now you try to see, for 1, 2, 3, 4, 5 weeks, it's not been able to cross this 27,500 kind of mode. The most important is, it has not even now tested, and you can see a downside rally starting in Bank Nifty. And now it's trying to inch almost towards on the higher side. So again, you will see it might go higher towards around 300, 400 points, and might even inch towards 27,500. So that's there, but try to understand on the downside. So the first downside, which we can see multiple times, 2 spikes have been made around this zone. So we can clearly say the downside can basically become for Nifty roughly almost towards 26,444, right? So that's what the downside is for Bank Nifty for the first zone. The second zone, after this 26,444, there is no stopping. So 25,600 is basically on the cards, and always try to understand the impact of the downside is going to be huge, because after this there is again no stopping towards the main level 24,444. So what's happening over here? You have a clear runway of downside open for Bank Nifty. So slight confusion in the elections. What will happen? The downslide will come way fast than the upslide. But if the downslide comes so fast and Modi ji comes back, the upside will come zoomingly fast, right? So if the fall is brutal, obviously the rise will be one way and no one would anticipate that. So we are very clear on our important levels of Nifty, and now we have for Bank Nifty also. One thing is 26,444, then you have 25,600, and you have 24,444. So more or less I can say almost around this 1,000 points rally of downside is there, and even over here you have roughly around 1,000 points over here. So 1,000, like 2,000 points on the downside clearly shows 7-8% of downside on Bank Nifty is possible, right? So that's what the weekly impact shows us. Now let's say the daily side, since it's choppy sideways kind of zone on the weekly format, let us see if we get some important levels from daily as well. So most important was this higher side which was made, and it made a U-turn and then sharp downside happened, and this rise was again very fast, and these were loss of momentum kind of candles. And the good point here was again there was small selling, but now the selling became very heavy. This is again the impact. The selling was heavy and still we are seeing a reversal happening over here. The continuous downslide did not make it to the reset level also, right? So that's the most important point to understand. The reset level did not came, and the last 2 days the lows were same, right? So the lows were same, and today open is also around that low. Now the crucial point of the open is equal to low, and you are seeing the first hour or again 2 hours of upside, which basically shows a short covering from this end. Once it starts, can inch almost towards the higher side. So a quick bounce is always possible, but now we have a very crucial level on the daily side. We can say this is the level of make and break, right? So short term point of view, again 26,650 kind of 600 kind of zone where multiple lows have been made. Once this is breached, straight towards this, and it will not stop even for a moment and slice it down towards 25,600. So around 1,200 points of downside is clearly visible on Bank Nifty, but not after such a small candles which are appearing for last 7-8 days. It might take a bounce and then again come back to this zone. The important point for us is now to look out for today's low or today's open, right? So that's the key level for us for Bank Nifty. So Bank Nifty also has huge downside open. Nifty also has huge downside open. That is the takeaway for Nifty and Bank Nifty. And looking out for bull spread or bull ratio is very good in these kind of scenarios when there is continuous fall and not even reaching to the retest point. Going out even on the 4-hour chart, let us see if we can get more information. It's absolutely clear. If you see the huge downside with a red candle was supported by 2 bounce above the base, a small red, and now today inching this higher side, not even taking out all the highs of the previous candle. It will have a clear runway towards 27,000 or so, right? So that's what is very clear. Even after a sharp downside, you are seeing sustenance happening at these levels, and that will basically show a good bounce appearing once again. So that's Nifty and Bank Nifty point of view. Today I'll show you 2 more concepts. So first, if you go to our website tradingcampus.in, we have put something called as terminal, right? And terminal has a lot of stuff for you. If you want, you can work on technical screener, options, pair trading, heat maps, and on the fundamental side also stuff is there. All our webinars are placed over here, and you can also subscribe for upcoming events and stuff. The most important which I wanted to show is first pair trading. If you want to understand what's happening on Nifty and Bank Nifty, obviously you can select any of the pairs you want, but we are today focusing on Bank Nifty and Nifty. If I see Bank Nifty divide by Nifty, that's called the ratio, Bank Nifty divide by Nifty, and we see that the ratio goes down, then it goes up, and so on. So right now the ratio will go up or down, we don't know. So you cannot trade on the ratio. So we convert this ratio, normalize this using the Z model. Now what is happening over here? Whenever the ratio, or you can say this normalized level, go past the above red line, it will basically come down, and when it goes below this, it will go up. Now we can see currently we are almost in between the two. When you say in between the two, then the likeliness of going up or likeliness of going down is quite possible. And the most important is Now we can say Nifty and Bank Nifty, you cannot be biased on any one. If it is on the higher side, you can be bearish on Bank Nifty, and if it is on the lower side, you can be bullish on Bank Nifty. Since it is in between, you cannot say any. But if a sharp downside comes, what will happen? This ratio will be pulled almost towards the lower level. And again, we have seen whenever it is pulled towards the lower level, what happens? A sharp rise takes place. So prior to the election, when it inches towards these lower level, you will see a sharp rise coming through. So you can also see the signals basically come through the crossovers, which is also being placed. But right now, there is no point in trading because it is not on the extreme side. So you can create your own pairs, let's say Infosys, TCS and stuff like that, and you can work on the same. Coming to the second point, which is again very interesting. Nowadays, many people keep trading options, but without knowing the importance of volatility. So in options analytics, we have placed something called as all the option parameters which are over here. Now, one of the best one is IV price chart, right? So if I go to IV price chart, and you can select any of the stock profile over here, and I basically selected Kotak Bank. Now, why I've selected Kotak Bank, I will explain you. But first is to understand, this is the chart of Kotak Bank. Okay. The second point, if I see at the bottom, it shows the IV and the historical IV. For now, try to avoid historical IV. Let's look at the light blue color, which is the IV. What I see on Kotak Bank, for such a long time, Kotak Bank had the highest IV around 10th of December, right? So around 2 months back, you had the IV, which was around 50 or so. Now, when we see the IV has been gradually shifting or driving down, and almost now it's towards 22 or so. So from 50, it has come towards 22. So that's like 50% drop in IV, and it's dropped because it's basically 3 months low, you can say, and it's been sliding on the sideways. That's what we need to understand. If the IV drops, okay, and that too also 50% from the normal last 3 months, so that's like the lowest IVs, we need to go and check out Kotak Bank, right? So that's also the stock that you can pick from looking the IV chart. Now, the most understanding which we need to know, let's say from the weekly side, because we need 3 months of data. When we are seeing 3 months from December point of view, it's been going in the triangle format. And then you had a sharp uptick, which basically came because of the good results and stuff. And you see a huge upside or a strong buying came in. After this, it's not been able to inch on the higher side. That's where continuous resistance has been seen even in the last week. And now if you see, if this week's low, so last week's low, if you see at the top is 1270. So if 1270 is taken out, straight fall towards 1244 is quite visible. Now try to understand, when the price falls, IV rises. And that's what we are trying to pick up, low IV stocks, which will become high IV stocks. So if you want to look for sell opportunities, these kind of opportunities will give you a great boost. And even if I basically go out and see on the daily chart, does that level hold or not? So this is very good. Green Moribazu, loss of momentum, trying to go sideways. Then you have a red candle. Again, he's trying to inch on the higher side, but it's very, very clear. Once this level 1270 is taken out, you have a sharp downside towards 1244 or so. So that's how you can also look at these IV and price chart for any stocks which you are interested in. So before trading, I would suggest you should always look at how the IV has been responding to any of your charts, right? So any stock that you're trying to focus, first I would suggest to also check the IV pattern if you're trying to look for sell opportunities, and if the IVs are also low for that stock, that's the best stock you're trying to target. So apart from having your pattern right, if you get one more conviction from IV, that's going to be a very, very amazing trade. And that's how, again, we can see loss of momentum might spike up once again, come back down, but below this 1270, you will see a slide towards 1244, right? So this is how also you can use the IV format. Now there are many other things which we have put on the terminal, so you can basically take some time out and understand where is the put call ratio for every stock, right? It's not for Nifty or Bank Nifty. You can see for every stock. Then you can also do OI analytics for any symbol, any expiry. You can even go back. So let's say ACC, you can also go back last 8 to 10 months and see how the OI and the price changes, right? So these things are there. I would suggest try to explore things and try to basically look out for best trades. Now again, coming back to Nifty, Bank Nifty, we are very, very clear for our levels for Nifty and Bank Nifty, but downside is open, right? So keep that in mind. That's very, very important. And for crude and currency will not have a big upside now. It might go sideways. It might basically spike towards 72.5, but the downside will come through. Why? Because dollar index will go sideways. The most important is crude will go on the higher side. So please understand, if you're trying to trade all these stocks like Asian Paint and all these oil related stocks, this will be the base. These were the highs or the prior resistance, 62.65 kind of stuff might come back and then zoom all the way up. So oil is going to be on a rise for 5 to 7%. That's very, very clear from this chart. And now we can see, obviously this rise was very fast and can basically come back down. That's what I was trying to say. And once it emerges from here, it will basically have a good upside almost towards 72 or so. So oil is on an up move, right? So that's what one has to understand. And that's very, very clear. If you see so many times, it has congestion has been made and then it just spiked through, right? So that's where you need to understand for the oil related stocks, right? So that's it for the day. We'll connect again tomorrow and basically try to remain trade less with less exposure, because since the elections are coming up, the volatility will inch higher, right? So thank you very much for joining in.